Okay, so let's start off with so first of all, I don't know what the parameters are in terms of like why it's skipping things and why it's not skipping things. If it took one trade out of 75, I mean that's insane. And of those 74 skips, 65 of them turn into moves 5%. So maybe like like flip the parameters in terms of like I don't know, like switch it upside down, like all the ones that it's skipping, like reverse it or something, I guess, so that it takes all of those. I'm not sure why it's not taking them. Um, oh, the reason mid range chop already extended past prior swing high. Um, hidden bullish divergence present. I don't know why it's not taking it then, but let's just take this 4826. Um, okay, so right here, I mean, like maybe you could put something into where it's sweeping prior liquidity because all of these are what's known as demand zones. You can see where price is reacting to the upside off of each test of this 170 level, meaning that this is a major area where buyers are concentrated and they're acting as support. But every time it tries to move up, you see it kind of has difficulty up here at the roughly 200 area, most likely because institutions were not done accumulating for this move here, and so they keep pushing the price down until they unlock enough shares, and that's what triggers the short squeeze and the fuel higher. So basically, um, you know, I don't know why it would skip something like this other than you don't have the parameters in place for buying around prior demand zones. So if you can teach it um, to buy at these prior demand zones or have it like recognize it as a demand zone because there's high areas of volume here where it's buying and supporting price, um, you know and it's important also to know that like this entire move is in a massive uptrend on higher time frame since the 2022 lows down here. So although it is in a choppy range, all of these areas are basically just massive reaccumulation phases. I mentioned that you could also code Wyckoff into it. This is basically all price does over and over again. You can see these phases here, especially this one where you get this sort of accumulation phase where there's kind of like low volatility. It makes that final sweep. This is called a spring. And then it just shoots up really quickly. And then conversely, when it does hit the measured move, where you basically take this whole base and multiply it by 2 and it moves up, then you start seeing price kind of rejecting and building a distribution phase, which is very similar to what the triple Qs are doing right now. And it just does this over and over again on all time frames. So you probably want to add demand and supply zones into the algorithm so it can recognize these areas as a really good buy area. Now if this was the last point of supply and this was just like a really strong, this was the actual breakdown, obviously it would get slaughtered. So you should have protections in place that if this is the final breakdown, it doesn't just get absolutely slaughtered. But in most cases, in strong uptrends, when you get these sort of like continuous sweeps of the low, it's typically this entire thing looks like some sort of reaccumulative process. And when it continues to hit these prior demand zones, one of them is going to end up doing something special, doing something like this. You get a really strong move higher, and then it just it's going back into this sort of choppy range. Um, So yeah, yeah. It also has to be able to tell when price. Vast majority of the time, price is in a trading range, and when it does finally break out to the upside or the downside, the move is very fast and violent. So keep that in mind. Hold on a sec. Let's see. XOM. Just refresh this. Um, let's see. 6/3/26. Yeah, this whole thing was just local distribution. Um, where was the other one? 11/5/25. Okay, so this is another. So like this entire thing here is a 3.5 year accumulation base, and once it can break through these highs after such a long base, it's fuel for a very strong upside move. I don't know how you program that into an algorithm, but those are just some of the nuances that go along with trying to teach something how to trade correctly. And um, you also have to be aware of the fact that if you were to trade, just spot, like just like buying shares versus options, the strategy for this type of thing is it's gonna be completely different, because if you just buy options for this, you're gonna get absolutely murdered on theta decay, because it's not breaking out in either direction. You have to understand like short term um, moves around these sort of demand areas, and where to sell around these supply zones. And it's basically just a giant range trade for like 3 freaking years. So understanding what time frame you're working on first and foremost is very important. But what was this, 11? Yeah, I don't know if it recognized this as a good trade and it skipped it because it was chopping. Yes, it's chopping, but at the same time, this really low compressed volatility after such a long base is pretty. It's usually indicative that you're probably going to move soon. All it needed was the Iran war. It needed some kind of catalyst, and that's typically when it'll finally break out. Um, some of the other questions you had: would you actually have skipped these trades? Well, no. I mean, based on based on the context, you have to treat them differently. Like this. What was it? 6/3. I mean, this here. You know, after a strong move down like this, it swept liquidity around these lows, popped higher, and then it just, you know what I mean? Like, it doesn't want to, if it's not going higher and it's getting suppressed, it usually will just continue to go down and sweep prior liquidity, typically finding demand around like large areas of volume, like this large bullish engulfing candle on high volume is indicative where there was a lot of buyer interest previously. So until price sweeps that prior area of demand, it will tend to give you this kind of like super choppy price action until it comes back down. Then you see how the candles just get really slow and compressed, and it's not really going anywhere for a bit. This is another reaccumulation phase, and then you get the move higher. So that might be something else you also want to put into the algorithm is you know understanding that these large bullish engulfing candles on high volume as prices coming back down and sweeping prior liquidity are also potentially good buy zones for it to initiate positions in shares and possibly options with adequate time. But these are on higher time frame. These are pretty complex structures. It's not like your typical just like 5 wave pattern where you're getting these really nice upswings with a pullback, and then it's not very uniform. It's complex. These are really just like choppy price patterns. So it's a little bit more difficult to establish you know, in terms of timing and time and price projections in these types of patterns, especially when like after a 3.5 year base, if this is breaking out and all of a sudden it's just getting slapped down so quickly, like I don't know, I don't like when it does that. Like if this is going to be legit, the price target for this would be like um, it should be higher than that, but my guess is this isn't done yet. It's just hitting some initial selling into into the breakout attempt. Let's see what else is in here. When I say already extended, am I actually skipping every time price is above? No, as I mentioned in the text, like I typically, I look for patterns that give you at least fairly predictable outcomes and ways to measure them. Um, so like I'll throw on a couple of the chart game things to see if I can give you a good example of like what an easy pattern would look like, something that gives you a high probability setup. So I'll do that in a sec. On divergences, I've been treating hidden bullish divergences as fuel that argues for a setup. That's correct, and that's correct in certain given like you have to understand context, right? That system is going to work while price is trending. It's not going to work when it goes into a range and chops all like if you were to take every little hidden divergence thing here, like you're just going to end up in a choppy range. There has to be like a fluid uptrend of higher highs, higher lows, and you'll see the RSI pulling back and giving you like clean hidden divergences. Um, so let me throw on a couple of these games and see if I can find some patterns that kind of can help me explain like what I'm talking about. So, all right. So like here, this is one of those false signals that pops up every now and then. Like let's just say you're like, oh, here's a hidden divergence because you have a higher low in price and a lower low on the RSI, and it just tanks. And you're like, why is it doing this? Why is it not popping back up? You can use the MACD also as confluence. So like, see, you get the hidden divergence, but the MACD is still on a sell signal and it's still below the zero line. That's basically a no-go, and this is an initial, it's a preemptive signal basically, and it's not going to give you just like another move back up that you can measure. um, as long as the MACD is still on a sell signal, you're not going to get a move higher. Instead, as it's going down, you're going to create the opposite, which is called a bullish divergence, where the RSIs are making higher lows as price is going lower until it finally reaches a point where it gets down to some prior demand zone. Like I was explaining before, how generally this whole area here is where buyers stepped in. And so once again, when price reaches this point, you can see buyers stepped in once again. And then when the MACD crosses over, not only just does it cross over here, but it crosses back above the zero line, then you have a higher probability of it going a bit higher. And I'll zoom in here just to show you what I'm talking about. The zero line is basically um, it's it's kind of like a gauge of momentum. When it's crossing below the zero line, you are in negative momentum, meaning you are more likely going to be in some type of downtrend. Um, when you get the MACD crossover, that gives you a higher probability that trend is going to reverse, but only, really when it crosses that zero line, do you have the highest probability. And, as you can see here, when it did cross the zero line, yes, you missed this entire low here, but you have more than enough room to capitalize on the rest of that move. I believe this is either the weekly or the daily time frame. On Chart Game, the time frame never changes, which creates a little bit more difficulty in terms of explaining how time frames work in this regard. But I mean, depending on what type of style or instrument you want to use for that particular system, like if you're using shares, you don't got to worry about time decay, but it's going to take a lot longer to make less. Or you can choose options with adequate time. It's going to cost more, but you're going to make 10, 20, 30 times the amount if done correctly and you use proper risk management. So in any case, um, on this particular uh, setup right here, I would have to argue that this whole thing it looks accumulative, and um, there is a hidden divergence, albeit preemptive. So I think I'm not going to go super heavy because it's already like 12 points off of where it bounced, but I think this could give, let's see, 46, add 4 to the high, maybe like 64, 56. There's probably a good like 15% left in this, so I'm not going to go super heavy. I'll take a small position of $100 trillion. And I'm just going to run this. Okay, so the fact that it's gapping down here at the prior high, um, I don't like that. I don't want to see it gap down. If anything, I wanted to see this gap up. Um, when you're getting towards a prior high and you're gapping down and you're not really getting like strong buying, um, I don't really like those. So I'm just gonna pass on this. Once it starts gapping down, I want to see gaps higher. Um, because if this is gapping down around these levels, I'm going to have to start thinking this is probably a double top, and it's going to have to come all the way back down to the low and sweep more liquidity for fuel so that it can go a bit higher. And it's probably just going to chop my range, so I'm going to skip that one. I want to find something that is more along the line of what I'm trying to explain. This here, I want nothing to do with this. This is just like low volatility chop. This one, this is just another low volatility chop down. You can see there's a lot of gaps, down gaps in here, another down gap. This is part of some probably higher time frame distribution, like a long chop. So I don't really have any interest in that. That's another thing too, is just like selection is so important. You don't want to waste your time or your capital on structures that are just going to offer you nothing but pain and wasting your time. This gap higher, gap down, gap down, gap down. This is kind of interesting here. This is this candle, this buying here looks interesting. I'm not completely convinced yet, but it looks like nothing prior to it. Like you don't see any candles like this anywhere else. So here you can see, once again, strong buying showed up at prior demand, prior swing low. And so basically, what causes this initial reaction is the fact that there were some stop losses here. Price came down, institutions, market makers swept the low to stop out these positions to unlock liquidity, and it started moving up. So I kind of want to see, because this does have the potential for a measured move. It's 28, 16, 20, yeah, 28 minus 16 is 12. Add 12 to 28, so there's a potential target of 40, but I want to see price prove that it can remain strong here, and then I'll consider buying and going long. Or it's just going to keep getting slammed down to the lows and I'm just going to be done with it. Okay, so maybe this is creating an inverse head and shoulders here. At least that's the first thing I'm thinking. So I'm just going to start a small position. If it's not finding continuation like pretty quickly, I'm just going to move on. Because I can't... That's what makes it difficult about this game, is I can't see what's going on before this happened. If this is the right side of a large distribution, then, I'm going to be able to tell pretty quickly, because as it approaches this high, like, it's probably going to get slammed down pretty sharply. But if it's not, then it should find continuation. So I'm just going to take a test position, which is basically just a small position just to see, what this thing is doing here. But like, when this thing wants to move, it's just gonna go. See, and you can you can see here, it's kind of like how it's behaving when it reaches a prior supply zone, which is basically where prior selling occurred. How it behaves as it approaches that is super important, because if it's trying to move back up to it and it gets slammed really hard back down and you get like a huge red candle, just don't even bother with it, or you go short. But like, this one's kind of interesting because you can see on each move down, the downswings are getting less volatile and it's actually getting more compressed. It's getting less violent basically. Each downswing is getting kind of like smaller and it's compressing to the right side. So this is typically the behavior it will exhibit when you're getting buyer absorption, meaning that buyers are stepping in and they're absorbing all of the selling. And then if this is going to be a really good upside move, you're going to see it coil to the right side, and then it's just going to like rip higher, because all the supply will have been exhausted, or at least enough of it to create like a really violent move higher and break through all these prior levels of resistance. So I'm just going to let this thing run for a bit, because I'm starting to think this is just going to like move higher really quickly, unless we get a huge supply bar, and it can't. Okay, well, it's not going to show me. Maybe that one didn't work. Some of these structures are just annoying. I'm not going to bother with this. This is already 200% off the low and you're getting a down gap. I don't want to short it, because this is most likely going to build into some kind of large range. This is another one. The downswings are getting more violent, so I'm just not gonna... It just has a certain look to it, I guess, when you know it's good. I think this is definitely one of those looks. You're getting like this whole thing, I have a feeling, is accumulation. So over here, this is interesting right here. The RSI dropped really low here. And it's basically just chopping and ranging and going sideways. These are the types of structures where you build up a lot of fuel for a strong upside move. So, and not only that, but towards the end here, um, you have another hidden divergence here, where your price is making a higher low, RSI made a lower low relative to the prior swing low. So, um, I think this has a pretty good chance of working actually. So we'll just measure this off this thing here, 65, 52, 3 to the high. But this isn't going to be the only way, because this is a horizontal structure. You can actually each one of these bases you can use as a measurement for fuel higher. So like this whole thing here, this whole thing here, this here. So I measure the high and the low of each one of these dips. So like let's see here, 69.46. So that's like 8. The high is 72. 12. So that's 20. 71. 8. 28 points. So this should hit 100. This could hit 100. This has enough fuel to hit 100 if it's actually accumulation. So I'm gonna go really heavy on this actually, because I think this is going to, if the game lets me see it, I think this is going to be really good. If it can break above the high and not kill me. The annoying part is waiting for it to actually break out, because when it does finally break out, like, there's no question, it just goes absolutely like insane. Alright, so we already got a move of 10 points, so it's already up like 15%, but it has fuel to go to 100. It's just a question of whether the game is going to let me see the full move. It doesn't always do that, you know, because it could take time for the whole thing to actually happen. So like this is the perfect example of where you make a shit ton, is structures like this. You have this higher highs, higher lows. Every time it sweeps a demand zone, you get a sharp reaction higher. Sometimes it doesn't even have to sweep the lows. It'll just get down to here, and you see this kind of like volume spike in here. Meaning that there's a lot of interest in this area. And the horizontal, there's two different types of point and figure counts. There's vertical, where if you just have like a higher high, higher low, and you get this one sort of V-shaped thing, you can just measure that and take it. But when you have these large structures like this, I tend to measure the highs and lows of each dip. Like this could be, you could take the high and low of this, the high and low of this, the high and low of this. And a lot of times, like, it's crazy because when you add up all the numbers of all of these structures, it'll project you to some like even number, like a psychological number, like 100, just like it's doing now. So I'm gonna place a stop, since this thing is already up like 20 something percent. I'm gonna place my stop below the low of this large bullish engulfing candle, because this is where a lot of strong demand came in. And if this is going to accelerate higher, unless they really want to just be annoying and come back down and stop me out, I'll throw the stop under this area here. So like 81.50, so I can just guarantee lock-in profits. And then I'm just going to wait for it to hit 100 and hopefully not stop me out, or the game ends. So is that 23 quintillion on that one. So a lot of the time, like, A lot of them don't end up doing like jack shit. I could go like 5 or 6 of them where it's just annoying. I'll lose a little bit, maybe 2%, maybe nothing, and then my good ones I'll do like 11%, 9%, some fives, sevens. But when I'm losing, it's not a lot. Like it doesn't work out. It is what it is. That's part of taking risk. That's fine. You have to have those little downswings to be able to push it higher. But for the most part, that's just what it normally looks like. So hopefully that answered some of the questions.